Coming up on today's program, France's largest telecom operator, Orange, mulls expansion into Nigeria and South Africa. Egypt to reopen airports with scheduled international traffic on July the 1st after suspending regular commercial flights in March because of the coronavirus outbreak. Plus, Egypt, Sudan and Ethiopia resumed talks on the controversial Ethiopian Nile Dam today in another attempt to reach an agreement. Thank you for joining us on the program. I am Bisi Adebayo. Well, it's not looking like a bright start to the week at the major markets we track here in Africa, as all the indices were in the red at intraday, especially in South Africa, where the JSE index was down a whopping 2.25%. Here in Nigeria, the All-Share index had declined 0.11% as at intraday. The EGX30 in Egypt was also 0.78% negative at intraday, while Kenya closed positive 0.07% on Friday. Well, it's the same story in the Middle East, with intraday numbers showing red, starting from Abu Dhabi with a 0.2% drop and Dubai with a decline of 1.92%. The Qatar index was down 0.55%, while the Saudi index had lost 0.49%, also as at intraday. Same thing in Europe. The stocks were lower at intraday amid concerns over a resurgence of the coronavirus in Asia and the U.S. as lockdowns are eased. Orange Bats is standing by at the Frankfurt Stock Exchange to tell us what exactly is shaping today's markets. Good afternoon, Orange. It's good to see you. So it's a big day for Europe. Corona-induced travel restrictions have been lifted for most countries. Borders opened at midnight. But how important is this going to be economically?
Of the service industry, the tourism, the cafes and bars is so great. I admit I underestimated this at the start of Corona. It didn't really come into my mind the years before how big a contribution this is to the economy, German-wide, European-wide, worldwide. How many jobs also are dependent on this, and how dependent countries in Southern Europe are. This crisis has crystallized those ideas and those issues. And so a lot depends on this economically, a lot depends on this politically as well. And the fact is, though, that the opening of the borders still means that safety measures remain in place, both in the train or on the airplane on the way to your destination, or at the destination, sitting in restaurants, being in hotels. And this is also a problem, of course, for the tourist industry itself. It's not going to be back to 100%, unfortunately for them, because of the distancing problems or other issues. They're going to be able to serve a lot less people than they did before. But if this works out, it will be a big step forward for those people in those industries.
We'll see how that goes. But are financial markets going to get a boost from borders opening, or is the Powell shock still spooking investors?
Yes, it's the Powell shock. Ever since Jerome Powell took the stand in the press conference after the Fed meeting last Wednesday, the markets didn't really continue plunging on Friday, and they're not plunging today, but they're not making any great recovery either. All the European markets are losing as we speak, between something like 0.5% in Milan, for example, and just over 1%, 1.3% here in Frankfurt. This doesn't just have to do with Powell's gloomy forecast, his prediction of what Corona would be doing to the U.S. economy, but also with reports of a second wave starting in parts. In China, for example, in Beijing, many cases appearing there. In Tokyo, state of emergency ended in May. Now, new Corona cases. What does that do to the country there? And of course, in the United States, lots of new cases emerging, a troublesome trend coming from there.
Looking ahead in the week now, a moment of truth for DAX member Wirecard, with reports of fraudulent accounting hurting investor trust in the share. What's in store this week, Orange?
Well, investors hope that they're finally going to see the results of the company for 2019. Usually that's not a point which is discussed greatly, only when there are no results, when the announcement is postponed for some reason. And in the case of Wirecard, it's been postponed twice now. And so this week is the third date that has been set so far. Wirecard is still slated to present its results. And the background for this is something that's spooking investors even more than it would in any other case where a company somehow isn't getting its act together in accounting. There have been reports of fraudulent accounting for a long time now. It's done great damage to the reputation of the company and to the share price. And everyone is looking with great interest in how this DAX member, one of the 30 most important companies, at least in the stock market in Germany, is going to answer to the charges when it presents the results later this week.
Many thanks, Ulrich. We'll see you again tomorrow.
Thank you.
Let's now turn to the UK, where Juliana Olayinka would be telling us what major headlines are driving the markets this afternoon. Good afternoon, Juliana. So as shops reopen today, a new report from the prominent economic forecasters EY Item Club says the UK economy will not return to its December 2019 size until early 2023. Now, the club is forecasting that the British economy will shrink by 8% this year. That's another gloomy picture here.
It is another gloomy picture, Bissy. Good afternoon. EY Club, they're pretty well-revered, well-respected forecasting group. And I think the reason why the markets have picked up on this is because the decline in GDP has vastly contracted. They did actually predict that it would fall by about 6.8% this year, and that's obviously increased by 8.1%. And I believe that's obviously down to the pretty abysmal figures we got on Friday about the GDP. They actually went into further detail, and they said one of the reasons why Britain is on a pretty tough road to recovery is because they're not sure about Brexit. We know that after 4 rounds of negotiations, talks between Downing Street and Brussels hasn't really improved. We know that Prime Minister Boris Johnson, probably right about now, is having a phone call with the European Commission President, Ursula von der Leyen, really to try and find out if it's worth even having any more discussions or if Britain will bail out at the end of the year without a deal. And that's going to be of huge concern. And this is what EY Item Club have mentioned in their report. And that could steer us on a worse course. They also spoke about that second wave. I know you were just having that discussion in Frankfurt, and that's a major concern. In fact, the FTSE opened triple digits lower this morning because of what's happening in Beijing. We are seeing it spread around Asia, and there had already been concerns by health officials and the World Health Organization that there could be a second pandemic. There could be a second wave of this pandemic, and that could really steer Britain off course for recovering its economy, particularly as we're now obviously the 3rd worst country in the world for coronavirus deaths. But there was some light at the end of the tunnel. Although they predict a Q2 drop of 15% in GDP, they do think that it will pick up in Q3, and they predict that growth next year will be at 5.6%.
And still talking about the effects of the pandemic, Juliana, the WHO is warning against further lifting of lockdown in England until the government's contact tracing system has proven to be robust and effective. How encouraging is it for people to actually come out of their homes to the high streets to shop with this warning?
Well, of course, it's encouraging. I think it's encouraging here as it is across the world, especially for people that have been shielding or people who have, and a lot of people have, completely adhered to the government guidelines and have been stuck at home for 3 months. And this is almost the final phase of the lockdown. We still are waiting to see dates for when pubs, bars, clubs and hair salons can open, which is not expected to be earlier than the 4th of July. But, we're in the dead centre of London. I stepped out a couple of hours ago and it did feel like it was jam-packed. It probably isn't jam-packed because I don't know what jam-packed feels like, but there are lots and lots of people on the streets. There have been queues up and down, Primark, Selfridges, some of the really popular shops. So people are really happy to go out. But we have had this warning by WHO's Director for Europe, Dr. Hans Kluge, who's saying to the government, slow down. You've got to be very cautious. There's a reason why there were deaths that was so high here in the UK, and you do not want to see an upsurge of that, particularly again, as there is so much talk now about this second wave of COVID-19. Britain were pretty late into going into lockdown. They don't want Britain to be too early into lockdown. And going back into that contact and tracing application, this was, Boris Johnson's, basically his glory into trying to stop any cases from clustering and people from spreading the virus. But we have had data from its first week in trial, and the government were only able to contact 2/3 of people who gave information about who they had come into contact with. Some people refused to give information. Some people refused to answer the phone. They didn't have contact information for others. So it didn't seem to be a success. There are lots of criticisms around this application. It was already pretty late into going into trial anyway. And so, the World Health Organization is saying until you have that in place and it's working correctly, don't be too quick to push people outside, especially as another major discussions here in Britain is about the 2-meter distancing rule. And before pubs, bars and clubs are open, they're saying it will be impossible for them to operate under that guideline. So Boris Johnson has a lot of pressure to reduce that to 1 meter.
Yes, indeed, and I'm sure that the people can't really wait to be let out. Now, let's talk about BP's forecast now. It is actually forecast lower oil prices for decades to come as governments speed up plans to cut carbon emissions in the wake of the coronavirus pandemic. Of course, cutting price forecast by about 30%. How are the markets reacting to all of these news?
Well, the markets are reacting. The FTSE, the BP shares fell 4% after they made this announcement. This morning, they're looking at what's happening with COVID and the collapse in oil due to the fact that they just couldn't fuel these jets. And they're saying that their forecasts over the next couple of years will have to be downgraded, which is exactly what they've done. BP as well, just last week, they announced that they were cutting 10,000 jobs. And I think their new CEO is seeing this really, this COVID-19 pandemic as an opportunity to accelerate all of the revisions that the company wanted to do before the pandemic hit British shores. They did already say that by 2050, they want to be a net zero emission company. And by doing that, they definitely will have to streamline. So they said that this is an opportunity to do so. And one of the things that they have to do is downgrade their forecasts. Of course, the investors and the shareholders were not happy with that. But the numbers at intraday are the FTSE All Share, which is down 0.81%. The FTSE 100 is down 0.92%, and the FTSE 250 is down by 0.30%. In currencies, the pound is also down against the US dollar by 0.22%, down on the euro by 0.11%, and just slightly up on the Japanese yen by 0.32%.
Thank you, Juliana. And it's not any different in Asia, as the numbers were also in the red on Monday as investors weigh the potential impact of recent spikes in coronavirus cases. In Japan, the Nikkei 225 dropped 3.47%, closing at 21,530.95, while the Topix index slipped 2.54% to end its trading day at 1,530.78. And over in South Korea, the Kospi plunged 4.76%. Mainland Chinese stocks were lower, with the Shanghai Composite down 1.02% and the Shenzhen Component dipped 0.528%. Hong Kong's Hang Seng Index declined 2.16%. Meanwhile, the S&P ASX 200 in Australia fell 2.19%, closing at 5,719.8. And stock futures fell in early morning trading on Monday, pointing to more losses ahead as investors grapple with signs of a second wave of coronavirus cases as the economy reopens. Futures on the Dow Jones Industrial Average dropped 600 points, implying a fall of more than 672 points at Monday's open. S&P 500 and Nasdaq 100 futures also pointed to Monday opening declines for the two indexes. The early morning action in futures markets followed a big pullback last week triggered by rising fears of a resurgence in the virus, as well as investors' profit-taking after the massive comeback. Still to come on the program, we'll see how Tanzania is planning an economic recovery post-COVID-19. Please stay with us. Welcome back. Tanzania's finance minister on June the 11th unveiled the most optimistic 2020-2021 budget of $15.09 billion in the region, predicting a quick economic recovery amid hope of fruitful discussions with external creditors. The country recently declared itself free from COVID-19. In his budget presentation in the capital, Finance Minister Philip Mpango said the government evaluations showed that the country had not been too badly affected by the pandemic, allowing it to raise its growth forecast and maintain a firm financing schedule for ongoing development projects. According to the Finance Minister, real GDP growth is now projected to slow down to 5.5% in 2020 from the previous month's estimate of 4%, but lower than an earlier projection of 6.9%. William Artwell, practice lead, Sub-Saharan Africa at Docker Frontier in London, joins us now to talk more about the latest developments coming from Tanzania. Good afternoon, William. Thanks for joining us on the program. So, seeing the government of Tanzania forecasted a growth rate of 5.5% this year, even when other economies are expected to plunge in the face of coronavirus, what's given them so much optimism?
Well, I would take those numbers with a pinch of salt. We agree in the sense that we have also downgraded our growth outlook for Tanzania. The debate is really about the extent to which it's going to slow down. Our growth estimate is around 3.4% as opposed to over 5% in the case of the Finance Ministry, and that's really comes down to our expectations around much slower export growth, much weaker investment, particularly from international investors, and of course a much more difficult climate within the region as well. So I would say that those numbers that the Finance Ministry are working with are rather over-optimistic. We know the government of Tanzania often is quite restrictive in how it releases data, so it's quite hard to verify, of course, the short-term data that the Finance Ministry is probably referring to. But I would take that over 5% growth figure with a pinch of salt.
Well, the country has also been one of the first countries to announce that it has defeated coronavirus. So how seriously should we take these claims as well?
Well, again, that's very hard to verify. We know that the World Health Organization has expressed concerns over Tanzania's decision to stop publishing data on cases. That was in April, stopped submitting that data to the World Health Organization. So the truth is that outside observers actually don't know the extent of COVID-19. There have been reports from local journalists who apparently have been facing intimidation around secret burials of bodies and so on. So it's very unlikely that COVID-19 is actually contained in the country. And I think neighboring countries are very concerned about the situation as well. So we know that the Kenyan authorities, for instance, are stopping Tanzanian truck drivers, lorry drivers at the border, forcing them to take COVID tests. And those that test positive are being sent away, so being repatriated back to Tanzania. So this decision to clamp down on free availability of data is actually going to have real economic consequences for the Tanzanian market, particularly as other neighboring countries start to make it more difficult to do cross-border trade. So that, again, would also contribute to an economic slowdown and make that very optimistic figure that the finance minister announced very unlikely to be reached.
Tanzania is also looking to join the group of markets looking for debt relief. How serious is the country's debt situation? Do you think the government will be successful?
Well, Tanzania is not in that group of countries that is at very high risk of debt distress, for instance. Of course, it's built up very significant public debts over the past several years, same as countries around the region. So, of course, it would be looking to perhaps have a bit of a holiday in terms of being able to make those debt payments. That would create a little bit of cushioning, a little bit of wiggle room to provide a bit of extra budgetary spending as we go into this next budget cycle. Again, that would help the government to be able to provide a bit of fiscal stimulus and therefore support the economy a bit more. So it's probably going to have some success in getting some debt relief, at least a bit of a relaxation. But of course, multilateral lenders like the World Bank and so on are also going to be looking at Tanzania's governance record. There's a lot of concern around how the government has been, for instance, treating opposition or its transparency in terms of its data and reporting. So the multilateral lenders will probably use this request to put a bit more pressure on the government to encourage them to be more transparent.
Thanks, William, for speaking with us.
Pleasure.
France's largest telecom operator, Orange, believes it would benefit from having a wider footprint in Africa and will give itself a few months to make a possible move. The company's chief executive, Stephen Richard, identifies Nigeria and South Africa as possible new markets for the telco's expansion drive. The Middle East and Africa, where Orange has a presence in 18 countries, is the company's fastest growing market. Orange said earlier this year that it was bringing its operations in the Middle East and Africa into a single entity, paving the way for a potential listing of the operations that could raise cash to invest in overseas expansion. Egypt will reopen all its airports for scheduled international traffic on July the 1st after suspending regular commercial flights in March because of a COVID-19 pandemic. The Civil Aviation Minister, Mohamed Anbar, told the news conference that flights would resume gradually at the airports from the start of July, but foreign tourism would be limited to resorts in 3 coastal provinces. The aviation and tourism industries have outlined measures to be taken inside planes, at airports and in hotels to help ensure the health and safety of foreign tourists. Meantime, Egypt, Sudan and Ethiopia are expected to resume talks on the controversial Ethiopian Nile Dam today in another attempt to reach an agreement after nearly a decade of tensions and thorny negotiations. The Egyptian Water Ministry spokesman said in a press statement that the proposal document submitted by Ethiopia last Thursday and rejected by the other 2 delegations is technically unsound and legally inadequate. According to the spokesman, this proposal, if implemented, would annul all the agreements built jointly between the 3 nations in over 10 years. Under the proposal, Ethiopia would have the right to unilaterally set the rules of filling and filling and operating the dam, which has been the cause of a long-running dispute, without taking into account the interests of its downstream neighbors who would be left unprotected from possible damage. The Sudanese government has announced plans to roll out an experimental program of direct cash transfers to its neediest citizens next week as it tries to wean the country off costly subsidies. Inflation has been running at nearly 100% and the currency tumbling as the government prints money to subsidize bread, fuel and electricity. With foreign debts of around $62 billion, Sudan last week began talks with the International Monetary Fund on a non-funded program that could pave the way for international financial support. The Finance Ministry says under the new pilot cash payment program, the government will transfer 500 Sudanese pounds, which is about $9 per person each month, beginning in Khartoum's West Soba district. The program is being funded by the Sudanese government and international organizations. Let's tell you about a new report from the United Nations, which has found that gold production in the Democratic Republic of Congo continues to be systematically underreported, while tons of the precious metal is smuggled into global supply chains through its eastern neighbors. The UN group of experts in the Congo, in its annual reports that North Kivu, South Kivu and Ituri provinces reported official production of just over 60 kilograms of artisanal gold in 2019, but yet reported a total of just over 73 kilograms. The group estimates that at least 1.1 tons of gold were smuggled out of Ituri province alone in 2019. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.